Good morning. Strong Q2 GDP growth has sparked hopes of India hitting the 9% mark for financial year 2011. The fiscal deficit too seems to be under control. The core sector growth improved smartly as well in October. Now we will have to wait for the IIP report and the monthly inflation data. It would be interesting to watch RBI's reaction to the upbeat macroeconomic statistics. The mid-quarter review is scheduled for the 16th of December and the quarterly review is slated for the 25th of Jan. It could increase rates by 50 to 75 basis points next year. The start today is likely to be subdued one given the murky global outlook. However, there is a chance of a bounce back provided the external picture improves. The US stocks closed in the red despite encouraging consumer confidence data. European markets fell amid persistent worries over the sovereign debt situation. The euro slid below the $1.30 mark while the spread on Spanish and Portuguese debt hit new record highs. China's manufacturing expanded at a faster pace in 7 months in November. Keep an eye on the monthly auto and cement sales, trade data and manufacturing PMI. November was a bad month for the bulls not just in India but across the globe. The Sensex lost 2.5% last month while November was the first down month in 3 for top US stock indexes. So December will be an important month for all the global equity markets. The European debt situation will continue to have a major bearing on the sentiments until there is some softening in the bad news coming from that continent. Any monetary tightening by China could also sour the mood. US data points, of course, will continue to hog the limelight. Hopefully, the geopolitical situation in the Korean Peninsula will not deteriorate further. The ECB will meet on Thursday for a monetary policy review, and the ECB could be under pressure to abandon any plans to exit its ultra-easy monetary policy. The monthly US jobs data on Friday will be watched closely. Manufacturing PMI will be out across the globe on Wednesday. The FIIs were net buyers of Rs 8.89 billion in the cash segment on Tuesday, while the domestic institutions were net sellers of Rs 4.35 billion, according to the NSE website. The FIIs were net buyers at Rs 14.44 billion in the F&O segment on Tuesday, and the foreign funds were net buyers of Rs 2.72 billion in the cash segment on Monday as per the SEBI website. Indian economy grew 8.9% in the second quarter of the current fiscal. India's core sector output grew 7% year-on-year in October. India's agricultural and allied sector grew by 3.8% year-on-year during the first half of financial year 2011 on the back of better kharif crop output. The centre's fiscal deficit narrowed by 33.76% year-on-year for the period April to October 2010 on the back of better than expected revenue from the sale of spectrum and robust tax collections. PSU oil firms hiked jet fuel prices by 1.4%, the fourth increase in rates in 2 months. The Directorate General of Civil Aviation has set up a tariff analysis unit to monitor route-wise fare across networks on a regular basis. The Department of Pharmaceuticals, along with the domestic drug industry, will launch a global campaign to highlight the quality of generic drugs made in the country. RIL prolific D1 and D3 gas fields off the east coast have seen a 15% drop in production to about 45 to 46 million cubic meters per day because of reservoir complexities. Siemens Limited plans to invest $87 million in the development of wind turbines over the next 2 years. BHEL has backed an order worth Rs 37 billion to supply the country's first supercritical 700 megawatt coal-fired unit of Karnataka Power Corporation Limited for its thermal power station at Bellary. ABB Limited to buy Baldor Electric Company for about $3.1 billion in cash to expand the North American market for industrial motors and drives. IDBI Bank plans to raise $1 billion through bonds in the overseas market in the next 12 months. NTPC plans to place orders for generators worth $7.2 billion by the 31st of March as it accelerates capacity addition to help reduce blackouts. PNB has revised interest rates on fixed deposits above Rs 10 million to 8% for maturity over 1 year. The Shipping Corporation of India plans to raise 50 billion rupees via EBD route in the next 2 years to finance its fleet expansion. Moving on to the recommendations, the technical calls are: a buy on Tata Steel We recommend high-risk traders to buy the stock between the range of Rs 577 to Rs 579 with the stop loss to be maintained at Rs 569 for a target price of Rs 600. And a buy on TCS, we advise buying the stock above levels of Rs 1087 with the stop loss to be maintained at Rs 1067 for a target price of Rs 1127. And the derivative strategies are long Hindalco December future in the range of Rs 207 to Rs 209 for a target price of Rs 217 and the stop loss is to be placed at Rs 202. And long Union Bank December future in the range of Rs 351 to Rs 353 for a target price of Rs 364 and the stop loss is to be placed at Rs 245. Thank you and have a great day ahead.